Hello friends, welcome. This is an awareness video on income tax computation format for all type of taxpayers. Income Tax Act has classified the types of taxpayer in the categories so as to apply income tax rates for different type of taxpayers. And the taxpayer are categorized as below. They are individuals, HUF, Hindu Undivided Family, and association of persons known as AOP, and also we also discuss for body of individuals BOI, and partnership firms, and also for companies. So for the income tax computation format, first we start from individuals. So when an individual person having income from salary, income from pension, or income from house property, and also the income from other sources. Then we also discuss the computation of income tax for individual person carrying a business, that is known as the proprietorship. The proprietorship and the proprietor are concerned to be only one. So whatever income from business, income from any other sources, that is going to compute for income tax. And we also discuss for even profession. And after that we'll be just going to discuss about the income tax computation format. A partnership firm is where two or more persons come together to form a business and divide the profits in an agreed ratio. And to form a partnership firm, minimum 2 individual persons is required, and the maximum number of partners in a partnership firm is 100. After discussing income tax computation for firms, and we also go for the company, how to calculate income tax for the company as well. A company is a legal entity formed by a group of individuals, and there is totally 3 types of companies are available. They are private limited company. The minimum number of members to a private limited company is 2, which can be extended to a maximum of 200 at once. Public limited company. There is no limit regarding the maximum number of members in a public company. However, the minimum number of members are provided. A public company with a total of 7 members is registered. Such public companies are the companies listed on stock market. This business can use the public offerings known as IPO or FPO to raise the funds from the public. And next one is that one person company. It is a type of private limited company where only one member is required to form a company. Here, this member must be an individual and Indian resident. And also we discuss for AOI and also BOI. And AOI known as association of persons, and BOI known as body of individuals. AOI stands for association of persons, means a group of persons who come together for achieving a common objective and have the same mindset. Member of the AOP can be natural or artificial person. That means even an individual person can join in AOI, and also even a partnership firm also can join in AOI. Even a company also can join in a AOI. I repeat it once again. The members of the AOI can be natural or artificial persons. But BOI stands for body of individuals, means a group of individuals but only natural persons who come together for earning income. And we also discuss how to compute income tax for even AOP and also BOI. Now we'll just start the income tax computation for individuals first, then we go for individual proprietorship business and also profession. An individual person who have income from the heads of income from salary, income from house property, and income from other sources. All together will be knowing the same as the gross total income. From the gross total income we will be deducting the deductions. Now let's take an example. There is a person who is working in a company and the monthly salary of the person is around 50,000. So likely for 12 months the person will be getting rupees around 6 lakhs of salary. So if you once declare the 6 lakhs of salary, as per the Income Tax Act, the standard deduction applicable on salary is minus 50,000. So the total salary received from is The total salary received is 6 lakhs minus 50,000 is a standard deduction. So the taxable income from salary will be 5 lakhs and 50,000. And let's take an example. This person also have a property which is given for letter to somebody else, and the person is also getting some rent is rupees around 11 lakhs. So out of 11 lakhs of rupees, the person paid to local authority, the local taxes, example property tax and all. So out of 11 lakhs of total rent received through a property, let's take an example. The 1 lakh has been paid to the local tax authorities, and the remaining will be only 30 lakhs. On the 30 lakhs, Income Tax Act allows 30% standard deduction, so that will be rupees 3 lakhs. So the net income from the house property will be 7 lakhs. And let's take an example. There is a person who also have an income from other sources. Income from other sources like interest from savings bank account, interest from a fixed deposit, interest from postal income, and also having income from pension. So altogether there is totally around 2 lakhs of income. So income from salary, income from house property, income from other sources makes gross total income. Now the total income of the person is around 14 lakhs, and on these 14 lakhs, if you made any investment and if you made any expenditure that is allowed by the income tax department, you can claim that as the deductions. Deduction is very simple. Income tax department allows taxpayers to reduce the income if the taxpayer invest money or some expenditure that are allowed by the income tax department. So such cases you can use the deductions. But if you opt for new income tax slab rate regime, then you are not allowed to use any deduction under Chapter 6A of Income Tax Act. So if you go for old income tax slabs, you can utilize the deductions under Chapter 6A, for example rupees 2 lakhs, so your income will be only 12 lakhs. But if you go for new tax slab rate, then you are not allowed to claim any deduction, so your income will be 14 lakhs. So on the 12 lakhs we apply the old tax regime, on the 14 lakhs we apply the new tax slabs. Then we'll see the differences. And before that, I wanted to show you the list of the list of exemptions under deductions not allowed under the new tax regime, and the list of deductions allowed under new tax regime. Now just have a look into the all options one by one, so that you understand what is allowed, what is not allowed under new tax regime. So I'll just go for the calculation of the for the income of rupees 12 lakhs and also for 14 lakhs. So on the 12 lakhs we apply the old tax slabs, on the 14 lakh we apply the new income tax slabs. So now we understand one by one. Now the total income of the person as per the old tax regime is 12 lakhs, as the person is claiming 2 lakhs deductions. And if the same person opt for new income tax slab, the person is not allowed to utilize the deductions of rupees 2 lakhs, so the income will be 14 lakhs. So on the 12 lakhs, if you once apply the slabs, you can see that from the income 0 to 2,50,000, whatever income is there, that is 2,50,000. On the income, the applicable tax rate is 0%, so tax will be 0. I repeat it once again. Out of 12 lakhs of income, the first 2,50,000, whatever income is there in between 0 to 2.5, the income is 2,50,000. On the income, the applicable tax rate is 0, so the tax was 0. Again, whatever income is there in between 2.5 to 5, whatever income is there in between 2.5 to 5, that means 2.5 lakhs to 5 lakhs, the income value was 2,50,000. On this 2,50,000, the applicable slab rate was 5%, so that will be 12,500. And whatever income is there in between 5 lakhs to 10 lakhs, whatever income is there in between 5 lakhs to 10 lakhs, that is 5 lakhs, on that income the applicable slab rate is what 20%, so the tax will be 1 lakh rupees. And whatever income is there above 10 lakhs, and here we have income of rupees 12 lakhs, and whatever income is above 10 lakhs, that is around only 2 lakhs, so on these 2 lakhs the applicable slab rate was 30%, so the tax will be 60,000. So altogether the total tax was 1,72,500 on the income of rupees 12 lakhs, and this is the total tax liability as per the old tax regime is 1,72,000. Likely, if you once compare the same, you can see there is no tax in between 0 to 2.5 lakh, no tax, 2.5 to 5 lakhs 5%, 5 to 7.5 10%, again 7.5 to 10 lakhs 15%, 10 lakhs to 12 lakh 50,000 20%, 12.5 to 15 lakhs 25%, 15 lakhs and above 0. So if you once apply the new tax slab rate, then the total liability of the taxpayer is 1,62,500. So 1,72,500 is a tax liability if you opt for the old tax slabs, and as per the new tax slabs the liability was 1,62,500. So I'll just take the same into the action. So you can see that the total tax liability as per the old tax regime is 1,72,000 and 1,62,500 is a tax liability as per the new income tax slab system. On the total tax liability, you can utilize the tax relaxation under section 87A only in the case when the total income of the person is less than 5 lakhs. If the total income of the taxpayer is less than 5 lakhs, the person can claim the tax relaxation, that is known as tax rebate, under section 87A. The rupees was 12,500. So as this person have income more than 5 lakh, the person cannot utilize any tax rebate under section 87A. So we'll go for the tax liability. On the 1,72,500 we add more percent cess and all, right? So now the liability of this person is what? 1,72,500 as per the new tax, as per the old tax regime, and 1,62,500 is as per the new tax regime. If any taxes that are already deposited by the taxpayer or by the any employer on this person's PAN card, example TDS. So first we need to check that if any taxes are deposited on this PAN card or not. For example, if the total taxes deposited on this person PAN card is rupees 2 lakhs, so the tax liability of this person is 1,72,500. If 2 lakhs taxes are already deposited, and the remaining amount will be refunded to this person's bank account within 15 days or 3 months from the date of income tax return filing. So if the tax liability is less than taxes deposited, then the person will get a refund. But if only 2,000 taxes deposited, then you need to pay additionally 1,70,500, that is a remaining liability. So the total tax liability minus total taxes already deposited equals to tax liability or tax refunded. If the tax deposited are higher than the tax liability, then you will get a refund. If the taxes are already deposited less than the tax liability, then you need to pay the remaining liability to the government. And again, on these tax liabilities we need to apply 4% cess, and moreover 10% of the income tax where the total income exceeds 50 lakhs. Now the person income is 12 lakhs and 14 lakhs. So as the income is not exceeding rupees 50 lakhs, we don't need to charge any surcharge. But when the income exceeds 50 lakhs, 10% of surcharge will be applicable. And again, when income exceeds 1 crore, the 15% of surcharge will be applicable. When income exceeds 2 crore, the 25% of the surcharge will be applicable. When income exceeds 5 crore, 37% of surcharge will be applicable together. So in this case, there is a person who has income from salary and income from house property and income from other sources, all together gross total income. Gross total income minus the deduction, the permissible and allowable deductions, equals to the gross total income. On the gross total income we need to apply the income tax slabs, then we'll get the total tax liability. Right, so that total tax liability has to deposit by the taxpayer in the income tax portal, and the website address is that tin.nsdl.com, tax information network.nsdl.com, national securities depository limited.com. There you need to go to e-payment and payment online, and you need to complete the payment selecting challan number 280 as a self-assessment tax. Again, if you do not file the return within the due dates of the income tax filing, then under section 234A, 1% interest will be applicable, and if the tax liability is more than 10,000, you are supposed to pay advance taxes within the financial year. If you do not deposit any advance taxes under section 234B, default in payment of advance taxes 1% per month. So if you if you do not file income tax returns on or before the due date, the interest 1% will be applicable under section 234A. And if your self-assessment tax, if the self-assessment tax is more than 10,000, you should deposit the taxes within the financial year. If you do not do that, so 234B will be applicable under section 234B for what? Default in payment of advance tax. And to deposit the advance taxes, there is some guidelines. By 15th of June, you supposed to deposit 15% of advance tax. Again, by 15th of September, you supposed to deposit 45% of advance tax. By 15th of March, you supposed to deposit 100% of advance tax. So if you are depositing advance taxes but not as per the guideline, then under section 234, under section 234C, 1% interest will be applicable. So if you do not file income tax returns on or due date, then 234A will be applicable. If you are completely failed to deposit the advance tax, then 234B will be applicable. And if you are depositing advance taxes but not as per the guideline, then 234C will be applicable. And moreover, if you are filing the income tax return even after extending the due dates, then the late fees and penalties will be applicable under section 234, under section 234E, again under section 234F. So the government used to levy rupees around 5,000 or 10,000 penalties, so that will be applicable, right? So this is how we are going to compute the income tax for an individual person. We also have a practical scenario in the next videos. Now we understand for income tax computation for a individual person carrying on a business or profession. So on that situation, first we need to see that whether the person is having any income from house property or not. If the person doesn't have any income from salary or any income from house property, then it is not compulsory to include here. So if any person is also having income from business or profession together, if the person have any income from salary, you may include the same. So you can file ITR form number 4 by opting income tax presumptive taxation scheme. So I repeat the things once again. If the same individual person carrying on business or profession, then we need to include income from salary, income from house property, income from business or profession if available, again income from other sources. Then all together we'll just conclude the gross total income. So when you are computing income from business, either you need to follow presumptive taxation scheme or audit. Presumptive taxation scheme is launched to reduce the complaints of tax audit and filings. So if any business turnover is less than 2 crore, they can go for presumptive taxation scheme. They can compute the minimum income. They are required to declare minimum income to the government, that is known as presumptive income, if the business turnover is less than 2 crore. Okay, and again, if there is any profession, if the profession income is less than 50 lakhs, if the profession income is less than 50 lakhs, they can calculate the presumptive income under 44 ADA Income Tax Act. And if the business turnover is more than 2 crore, or if any profession gross receipts is more than 50 lakhs, then you need to compute the book of accounts profit, and that profit will be added into that individual person's total income. Okay, so if you have a business or profession, either you need to go for audit or non-audit. There is eligibility criteria for non-audit. The business total gross receipts or turnover should be less than 2 crore. If there is a profession, that should be less than 50 lakhs. If it is a business, then on the gross turnover, or on the gross receipts, we need to segregate the total, what is a gross received through digital mode and a gross receipts through the cash. So whatever you have received through digital mode on that total turnover or gross receipts, 6% will be considered as a profit, and whatever you received in the form of cash on the amount, 8% will be considered as a profit. So altogether, so if the business income is 60 lakhs, out of 60 lakhs received in digital mode rupees 30 lakhs and received in cash mode rupees 30 lakhs. So on the bank receipts 1,80,000, that is a 6%. On the cash receipts 2,40,000, that is 8%, will be considered as a profit from the business. And if this person is running any profession, then the person need to declare minimum 50% as the income from the profession. So if the person receive totally 40 lakhs of the gross receipt, then the person is required to declare minimum 20 lakhs as the profit from the profession. If the person want to declare less than the minimum profits, then the person need to go for audit, even if the business turnover is less than 2 crore, even if the profession gross receipts is less than 50 lakhs. Okay, so now we'll be doing the total income from salary 5,50,000 after deducting 50,000 as standard deduction, and income from house property is 7 lakhs, and income from business or profession is 4,20,000, and altogether 18 lakhs and 70,000. So whatever you have done for an individual, the same will be applicable even to the individual sole proprietorship or even individual profession. The same calculation has to be done even for the individual business and also profession. And next we'll go for the firm. And before discussing the income tax computation format for firm, first you should understand the points to be noted. The salary or bonus or commission or remuneration paid to non-working partners is not allowed under deductions. And while making payments to working partners, you need to remember two more things. One is that on first 3 lakhs of profit or even loss, you are not allowed to make the payment of remuneration or salary or bonus more than 1,50,000 in case of loss. In case of profit, you are not allowed to make the payment of more than 90%. Okay, so of the book of account profit, whichever is higher. So you are not allowed to make the payment beyond 1,50,000 in case of loss and more than 90% of the profit in case of profit. So there are something to be followed, and for the remaining balances more than 60% of the, that means if the business profit is more than 3 lakhs, then you are not allowed to make the payments towards your partner, that is more than 60%. If the business profit is less than 3 lakhs, you can pay hardly 1,50,000 or 90%. If the business profit is more than 3 lakhs, you are allowed to pay hardly 60% of book of accounts profit. Even a partnership firm also can go for the presumptive taxation scheme, so they no need to declare the book of account, they no need to showcase the book of account statement to the government, they no need to file any document to the government while filing income tax return if they opt for presumptive taxation scheme. So again, to get eligible under presumptive taxation scheme, the business turnover must be less than 2 crore. If this partnership firm is running a profession, then the business turnover should be less than 50 lakhs. So on such cases, you can, even the partnership firm also can go for the presumptive taxation scheme. So as per the presumptive taxation scheme, that on the total turnover of gross receipt, first you need to split that total receipts through bank and the total receipts through cash. Let's take an example. Out of 70 lakhs of the gross receipts or turnover, 35 lakhs received in bank and 35 lakhs received via cash. So on the amount whatever you collected through bank, on the amount, so 6% will be considered as profit, that is 2 lakhs and 10,000. On the cash receipts, 8% will be considered as a profit, that is 2 lakhs and 80,000. So these 2 lakh 10,000 and 2 lakh 80,000 is the total presumptive income from the business. Yeah, and if the business turnover is more than 2 crore, or if you are not declaring minimum 4,90,000, if you wanted to declare less than presumptive income, or if your business turnover is more than 2 crore, then you need to go for audit. On such cases, whatever profit is there in the profit and loss account, that to be considered as income from business. Okay, so if you go for presumptive taxation scheme, the minimum profit will be considered as profit, and if you are not eligible for presumptive taxation scheme, whatever profit that you are getting from business profit and loss account, that will be considered as income from business. So again, if this partnership firm have any income from property, then that to be added. So income from business plus income from house property plus income from other sources, if like any interest, right? So all together make the gross total income. From that gross total income, you can deduct the deduction like you donate to any charity, or you, as a partnership firm you donate to any charitable trust, or as a partnership firm you donate to a political party. On such cases you are also allowed to get some deductions. So out of the total income of rupees 6,90,000, the partnership firm has donated rupees 90,000 to some X. So the net taxable income will be 6 lakhs. So for partnership firm there is no income tax slabs as available as like individual. So for partnership firm the total flat rate is 30% is taxable. The partnership firm including LLP is taxable at 30%. Again, the surcharge 12% will be applicable in case where the total gross receipts or turnover exceeds 1 crore. At the same time, 4% cess will be applicable on the total tax liability. So now the total taxable income is 6 lakhs. On the 6 lakhs, we need to add 30% income tax. So 30% the tax liability now will be it's 1,80,000. On 1,80,000 we need to add cess at the rate of 4%, so that will be 7,200. Then the total net tax liability was around 1,87,200. Okay, so now this is what for the calculation of a firm. Now we'll take a look into the company also. For companies, first we need to get that for a domestic company the basic tax rate is 30%. However, the tax rate is 12% is applicable if the turnover or gross receipt of the company does not exceed 400 crores. The foreign company will be taxable at the rate of 40%. So now moreover this surcharge 7% will be applicable on the domestic company if the gross turnover exceeds more than 1 crore but under 10 crores. And surcharge 12% is applicable if the business turnover is more than 10 crores for a domestic companies. So if it is less than 10 crore for a foreign company, 2% surcharge. If it is more than 10 crore, then 5% surcharge will be applicable. And the income will be calculated based on profit earned from the business and income from capital gains, and income from renting a property, and income from other sources like dividends and also interest, etc. So whatever income you collected, on that income the flat 30% or 25% or 40% will applicable accordingly. So let's take an example. There is a business whose turnover is around 1 crore and 50 lakhs. So as the business turnover is not exceeding 400 crore, the applicable tax rate is 25%. And now there is a business whose turnover is more than 400 crore, then the applicable tax rate is what? 30%. And if there is any foreign company having turnover around 25 lakhs, then then still the 40% tax liability will be applicable, and more on this tax amount 4% extra will be added. And if the business turnover is more than 1 crore, 7% of surcharge, and if the business turnover is more than 10 crore, then 12% of surcharge will be applicable. And now we'll go for association of persons and also body of individuals. So for them the basic tax rate was 30%, where the profits are known or determined. So where profits are unknown or cannot be determined, then the marginal tax rates will be applicable, right? Thank you.